If you think about it, we're all kind of on this journey or evolution of investment knowledge. At some point, we all thought money could only be earned at our jobs and we had to stuff it under a mattress, checking account. Then we developed a sense of inflation, which prompted us to look outside savings accounts to things that earn more than 0.0000001% interest, and we found banks. After using some of their products, high interest savings accounts, and getting into mutual funds, time has passed and we wanted more. With our disciplined savings starting to kind of grow, the fees we were paying were getting pretty intense too. Plus, the banks seemed to make money whether the markets did well or didn't, and so all the more reason to kind of look into this. Then with the internet providing online brokers and access to personal finance information on channels such as this, we were able to do something that was really hard to do before, and that was DIY investing. For a tiny bit of extra effort, you can get the same results, pretty close results as a bank, but for a fraction of the fees. And those fees invested over time will help you to retire 25 to 30% richer than you would if you stuck with them. And those are just the portfolios. With a minimal amount of extra work on top of that, you can cut down those fees to even less and retire that much better off too. Now, I totally get if this makes you nervous. We're talking about our life savings here, our retirement, so you don't really want to mess around with this stuff. But let me ask you this. When you first wanted to do anything, like change the oil in your car or make a smoothie, what did you do? Well, you probably looked up a video on YouTube. And after you looked up some recipes, followed a couple of videos, you got the hang of how to make a smoothie, and then you could just make smoothies whenever you want and even get a little creative yourself. Well, investing is the same thing. And with ETFs, you can start to get a little creative if you want to, or keep it really simple if that's more your thing. You don't want to spend more time looking at investments than you really have to. Now, of course, do your research, look at the advantages and disadvantages of ETFs, which we will talk about. But I think you'll find with most of the online finance community, this is going to work for 99% of people. And you may as well save the money because it requires such little maintenance and effort and just a little bit of financial knowledge. Now, I bet you guys already know that, so let's not waste any more time. Now, we have a lot of new people who have joined the channel since I made an earlier video about my RSP and Lira and TFSA and the ETF that I put most of my investable money in. But let's just recap those points. I've added a couple new ones just to dive a little bit more in depth with this video about ETF. I'm gonna lay the groundwork, and then at the end of this video, we'll get to talking about index funds, and I'll make another video dedicated to the US index funds and the differences between those. So let's just go over what an ETF is. Exchange traded fund. First, how is it different than a mutual fund, where it's actually very similar? It's a basket of different companies. However, a ETF typically has a lower fee and you can do more customization in the sense you can mix up different ETFs, whereas a mutual fund is usually kind of like a set product from a bank. It's similar to the portfolios on Questrade, and those are really for people who kind of just want to dive into something, invest, but aren't too interested in what everything goes into, but want to really automate things, and that's fine. Managing ETFs individually, yes, they are a little bit more maintenance, but only very little bit more. How's it different than a stock? Well, it's more diversified. It's usually dealing with groups of companies, which is good. It kind of protects you a little bit. It's a little bit less maintenance than stocks. In general, a little bit less risky, again, because you have those groups of companies. Now, ETFs and those baskets can be anything that you want. They can follow a certain country, the economy of a certain country, or it can be baskets of a certain industry like tech or cannabis or medicine. Even if you're into other vehicles like REITs or dividend investings, there are ETFs that pay dividends in different frequencies, every quarter, every month. It just kind of depends on what you're looking for and what you're willing to pay in the management fees too, of course. Now, my favorite thing about ETFs is you don't have to pick the winning horse. You don't have to select a certain company out of a industry and figure out if they're going to be the best. If you're into, let's say, the medical field and you think this year the medical field is going to be awesome, you don't have to go through a list of medical companies. You can find an ETF that has a small portion of a lot of medical companies, and that way you are making that call on the industry as a whole and not necessarily one company trying to pick the company that's going to do the best there. You'll get a little bit of all of them, and you'll be able to reap the benefits. That's another upside of diversification. Now, some downsides of the ETF. Okay, so Probably not a lot of flexibility. If you did want to invest more in a certain company in that ETF, you can't just go ahead and do that. You would have to actually buy shares of that company and hold them elsewhere in that same account or somewhere else. So you can't customize how the ETF balances the way that it distributes its money in that basket. So flexibility and customization, you're giving a little bit of that up in order to get diversification and a little bit less risk through that ETF. There's also the MER, which is the management expense ratio. It's a small fee that you will have to pay in order to hold that ETF. You don't have to do this with stocks. Like let's say you buy a stock on Questrade, you will pay typically like $5 to make the trade, and then you don't pay any more fees for holding that stock. However, with an ETF, because there are groups of companies and there is someone managing the balance of that ETF, there is a small MER fee, but these are typically much, much less than what you would pay for fees for a mutual fund at a bank. Other disadvantage maybe of ETFs, some might say, is there could be a little bit boring. I mean, all you really do is dollar cost average into these things, and you're off doing other things, watching TV, going for a walk, or whatever it is you do in COVID anyway. And yeah, you can kind of automate and forget about it for several years and do pretty well. For those people who are kind of more interested and want to fiddle and tweak with things like me, I have a separate account that I have just for fiddling with individual stocks and that kind of thing and learning. Okay, so now that we've covered ETFs, you should know that the ETFs that are the most popular are the ones that cover index funds. And indexes are those things you hear about on the news that are S&P 500, the NASDAQ, the Dow Jones Industrial Average. For Canada, you'll hear about the TSX. And those are typically the leaderboards or the groups of companies that exist in that particular country or industry or whatever. ETFs offer a low-cost way to get into those indexes, and that basket contains those top companies in those indexes, but the management of that index is pretty much a no-brainer. Most of the time, the brokers have these totally automated, so as a result, the MER is extremely low. For example, the ETF that I invest most of my money in, VSP.to, that one has a 0.09% MER. Compare that to the 2.5% MER of my mutual fund, that's a huge difference every year in fees. ETFs also let you get into having a piece of all of these companies at a low price. Right now, VSP.to is trading around $66. But imagine if you wanted to get one share of each one of these companies, and VSP tracks the S&P 500, which is a basket of 500 companies. Imagine the money you'd have to spend to get just one share of these 500 companies. Well, again, this is another advantage of ETFs. You can get a small piece of all 500 of those companies by getting one share of VSP.to. Now, VSP belongs to a broker called Vanguard. They kind of organize and manage all of these ETFs. There's another broker called iShares that you've probably already heard of. But when you're following indexes, don't stress too much about which one you get. They're gonna act pretty much the same. You obviously do wanna make sure the MER is about the same, but you can literally just pick your favorite or the one that has like the most easy to understand website. It doesn't really matter. I wouldn't stress too much about the difference between the two. Now, as far as the price between these two ETFs, you can see that both iShares and Vanguard are saying they're doing the same thing, but they have a different price to the share. But it doesn't really matter. Again, when you're buying index funds, you're buying the same essential thing. But I'll use an example of like pizzas. Think of a pizza as taking all 500 ingredients of the S&P 500 and you're making a pizza. Well, whether you cut that pizza into 10 pieces or 20 pieces or 25 pieces, it's still the same amount of pizza, just in different slices. And those number of units is the difference between the two, the iShares and Vanguard, and why you see a different price. So again, they're gonna act exactly like the index and they're not gonna earn you any more or less whether you choose one or the other. So it's worth explaining that. By the way, guys, if you are looking to open an account and you're Canadian, you're looking for a Canadian brokerage, I use Questrade. It's a product I've been with for a long time. Works really well. The other really good one is Wealthsimple. If you're looking to open an account, I do have links in the description that'll get you free $50 to trade, or $10,000 of a portfolio managed for free for a year. Full transparency, I do get a small kickback for you signing up, and any money I make would go back into making this channel better. So if you are thinking of starting one up in 2021, please consider using the link. So I did get a question from Ryan asking me what is in my investment portfolio. If you guys missed the previous videos, it's essentially VSP.to. You can see that it's actually making up the bulk of my investable money. And what it is a Canadian hedged S&P 500 index ETF. When we talk about Canadian hedging in more detail in the next video, I'll go over the advantages and disadvantages of that. But this is pretty straightforward to me because I can use Canadian dollars. It's traded on the TSX, and even come tax time, it's pretty easy to figure out. I heard about the S&P 500 and investing in that and what a solid investment that is over the long term. Heard about all that stuff in a book called Money Master the Game by Tony Robbins. If you guys are interested, I recommend that book. It was a pretty good one to get me going on understanding ETFs. So that's all I got for you guys on this one. I know it's a bit of a shorter video, but I just wanted to lay the groundwork for everybody so we start on the same page. In the next video, I'm going to compare different US indexes, and in the video after that, I'm going to answer those questions. So remember to hit that subscribe button, hit the like button if this brought you value, and let's learn together, and we'll figure this stuff out. I'm having lots of fun. I'm super excited that you guys wanted to learn ETFs over, penny stocks or SPACs and stuff right now. Definitely gotta learn how to walk before you run, right? So I'm excited to make more videos. Keep it locked right here. Until next time, have a great week. Spread the wealth. See you in the next one. Bye.